Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video for the new trading day, December 5th, 2024. And trading yesterday just ended. We saw U.S. stocks move sharply to the upside. We saw yields move lower. We saw the ISM data come in a little bit weaker than expected, but Fed Powell came out later in the afternoon and said that they're still searching for the neutral rate, but there is really no hurry to cut rates dramatically. Doesn't necessarily mean that they're not going to cut in the month of December. It's just that the neutral rate is probably higher than what the Fed chair expects, given the strength in the economy. So the market's sort of adjusting accordingly and has been adjusting accordingly in the markets as well. We did see gold prices go sideways. We saw oil prices move down, and late day rally in Bitcoin also pushed the price back toward the 100K. Falling short of that level, however, but hope springs eternal that we break above that 100K level going forward. What did it all do in the foreign exchange market? Well, I'm going to take a look at three of the major currency pairs to kickstart your trading day: the euro versus US dollar, dollar versus yen, and sterling versus US dollar. So let's get started. All right, I'm going to focus on the 4-hour chart for the euro versus US dollar. And if we take a look at the trading for this week, it's been fairly narrow with lots of up and down price action, as you can see from the different bars in that red box that I just showed. The upside, we saw the price move above the falling 100 bar moving average on the 4-hour chart. That level comes in at 1.0533. But like last week when the price moved above that level as well, it couldn't sustain the momentum. We rotated back to the downside, currently trading 1.05104. Below that level, 1.0533. If the price is going to go higher, we need to get above that level. We also need to get above this level right here, the 38.2% retracement. That's of the November trading range from this high to this low right here. Market moved fast to the downside into the, toward the last third of the month before rotating to the upside into the close of the month. In trading this week, we did see a rotation to the downside of the first day of the new calendar month, and we've been seeing this up and down price action. The 38.2 comes in at 1.05628. We need to get above that level in order to increase the bullish bias, and then above this swing area between 1.0592 to 1.0609. So overall, the sellers are more in control below these levels, and if the price can remain below those levels, then the bias does remain more to the downside. But first things first, need to get above the 100 bar moving average on the 4-hour chart to show that the market has some positive flows from the buyers that is able to push it above that key moving average. Now, on the downside, we could say that we do have higher lows through here. So that's not all that bad or bearish for this pair. But certainly if we do break below that trend line and then move below this swing area down through here, which was home to a number of different swing lows through here, before rotating back to the upside and trading this week. If we break below that level, 1.0448 to 1.0461, then the markets are going to start to look toward the low prices for the month of November that took the price all the way down to 1.0332. Okay, let's take a look at the dollar versus yen next. And for this currency pair, I'm going to focus on the hourly chart. And what we saw in trading yesterday was the price move higher in the Asian session, early European session. We broke above the 100-hour moving average, then broke above this swing area right through here near the 1.150436 level. I'll put a horizontal line across at that level right through there. It represents this low right here. We fell below that level and used that level as a resistance level through here. And for the most part here. I tried to hold above it here, but sold through here. And we moved above it in trading yesterday, rotating up to this swing area up through here. I'm going to put that in yellow here, outline that level's importance. The low comes at 153.198 to 151.198 to 151. Looks like 275. The price stalled within that area. You can see how it was a floor through here. Then moved above and below through here, but returned back to that level and rotated back to the downside through here. We fell back below 150.43 and also go back below the 100-hour moving average. Just should have turned the buyers to sellers, but it didn't. We saw that instead the buyers returned and we're back above this 150.43 level. So I think for the bias for this pair, it's a little bit more to the upside, being above these levels right through here. If it moved back below the 100-hour moving average, then all bets are off. Then this would have failed. We start to see rotation to the downside from there. Alternatively, if we do hold these levels and we start to move back up toward this level, we're going to need to get above that level, and then ultimately the 200-hour moving average, 38.2% retracement of this move down from the November high to the November low to prove that the buyers are more in control. And then not far from that is a 200-day moving average. So I give the tilt a little bit more to the upside here for this pair on the successful bounce in the vicinity of the 100-hour moving average and move back above the 150.43 level. We'll see if that momentum can continue in the new trading day. Finally, let's take a look at the sterling versus US dollar. And like the euro versus US dollar, this is the hourly chart. So we're into our fourth day of the new trading week. So on Monday, we moved out to the upside and fell to the downside on the same trading day. Came down to this swing area down here. On Tuesday, we rotated to the upside of finding resistance consistently against the 38.2% retracement. That's once, that's two, that's three times. That's of the move down from the November high to the November low. So the inability to get above that 38.2 kept the sellers in play through here. The last move to the downside that we saw in trading yesterday came down to test the 200-hour moving average, and lo and behold, buyers leaned against that level, pushed the price back to the upside. And then finally, we broke above the 38.2% retracement toward the end of the New York session today, rotating up to this swing area toward the 1.27159 level, but rotated back to the downside. Now, the price is up, traded above and below the 38.2, but the 100-hour moving average should hold on the downside. So there's a battle going on between 1.2682 and 1.27159 in between the 38.2% retracement, which again was ceiling three separate times in trading this week. So getting above that level, it's also conveniently right around the 1.2700 level, and staying above that level would be more bullish. So there you have it, a Kickstart video taking a look at the three major currency pairs from a technical perspective. I hope you found it helpful. My name is Greg Michalowski. Good fortune through trading. Bye-bye now.